Good morning, everybody. Here I am again, back in the world's most comfortable hoodie. I swear every morning that's my go-to move. I literally just go throw this hoodie on. I wear it in the morning to get me nice and comfortable, until I feel at ease with the day, and then I peel it off, and we get to work, we get loose. But there's nothing better than throwing this on and take that little few princess out for first walk of the day, but welcome. We are here. Sorry for the squeaker in the background. Normally she's rated up by now. I honestly forgot she was here. She was just hanging out. But if there's any squeaking, it's not me. It's her. Good morning, everybody. Welcome to today's pre-market prep session. What is this? What are we doing here? This is our daily session where we go over the important news, notes, analysis, trade ideas, and the mindset, right, that you use to break down this price action and kind of understand what's going on with markets. We're in a spot where we're looking to see, okay, what are we doing here, right? SPY and the overall market got a nice breakout above resistance. Now we're coming back down to kind of retest that area. But is it a retest, or are we, running out of steam and destined to fall even further? That is what this price action this week will, serve to continue to paint the picture of. That's what we're looking to get more info into and get more, exposition regarding that. Figured I'd leave Stevie out for this one. Hopefully she's not too distracting in the background. But as you can see, she's growing like a weed. Crazy, almost 40 pounds now. But definitely, an amazing blessing. Fun time. Not just working from home solo anymore. I got a coworker for the first time in my life. So let's see what we got going on here in this wonderful newsletter. As always, we're here to do one thing and one thing only. Let's get 1% better. We're not looking left. We're not looking right. We are comparing ourselves to who we were yesterday. And if you can say that I got out just a little bit ahead, right? I went to sleep with my head on the pillow just a little bit better than I was the day before. You had a great day, right? And that's what we're looking to do here. So throw those ones in the chat, whether you're watching live or via replay, and let's get into it. So, our top story here, yen weakens. The yen has been under pressure after dovish remarks from Japan's newly elected Prime Minister Shigeru Ishiba, and central bank policymakers push traders to scale back bets of another interest rate hike in the near term. The yen carry trade, which contributed to the global market meltdown in August, is also regaining momentum as traders expect the yen to weaken further. Now, what they said, quote, I don't believe we are in an environment that requires an additional rate increase, Ishiba said after meeting with the Bank of Japan Governor Kazuo Ueda on Wednesday. Ueda said the BOJ, Bank of Japan, would move cautiously on rate hikes on Thursday. Dovish BOJ policymaker Asahi Noguchi, sorry, I'm probably murdering all these names, said the central bank should patiently maintain loose monetary policy conditions. To note, Noguchi opposed July's rate hike as he believed Japan's economy was vulnerable to downside risks. Yen declines as the odds of rate hikes dim. The yen weakened against the US dollar. While Japanese stocks rose, the yen briefly dropped to about 147 overnight, its lowest level in at least a month, but has since recovered to around 146.4. Japan's benchmark blue chip Nikkei index, 225 index, ended 2% higher on Thursday, a day after it closed down 2.2%. So a lot of volatility there on the Nikkei. The yen posted its biggest drop in over 2 years on Wednesday after Ishiba's comments. This is because of indications that the new government may not be persuaded that deflation has been defeated, and comments by Ueda suggesting that the uncertainty of the global economy may deter it from hiking rates in the near term, said Seeking Alpha analyst Mark Chandler. He also noted that the yen is currently the weakest of the G10 currencies. And believe it or not, I mean, as if, I wasn't already saying that this week is a placeholder week, that is the biggest news that we had from yesterday coming into today, right? Really not a whole lot going on. And what does that mean? That means we shouldn't really be doing a whole lot. That's why we haven't been, kind of devoting large amounts of buying power to positions and really doing a whole lot of trading and executing a whole lot of trades, because these are the market conditions that get you absolutely flambéed out here trying to force something to happen when there is nothing going on, right? So that's the big theme of this week: survive. Make sure that you aren't overdoing it, that you withdrew the profits from the amazing past few weeks that we've had, and you're kind of just sitting back, playing with house money, taking it easy, not going too hard in terms of size, and remaining patient, right? Remaining patient for when it is time to execute. But, with such little news and, such crusty price action, there's no reason to be putting a ton of your money to work right now because it'll probably just end up working for the market makers, right? And no longer in your pocket. Um, what else is happening? A rapid fire stock news rundown here. Tesla shares slide after slight miss on Q3 deliveries. That sucks because there was a lot of volume going into Tesla the past few days. Could still be worthwhile and work out in the long term, but again, just another reason why kind of taking it easy this week. There are a lot of different things that are doing things. China, right? A lot of Chinese related tickers, China ETFs, Chinese stocks, kind of going crazy. The only Chinese stock that we've really been involved with is Billy, which went nuclear for us. But I'm not, I don't care if they do move. That's cool. I'm not trying to open the door to those stocks, right? Every once in a while, I will to Baba and PDD, but at the end of the day, it's like you just can't trust them. The movements that can be made overnight and like just the sweeping reforms that can take place are just very, very annoying. So it's like I'd rather just sit back and trade good old American companies, and I know that when I wake up in the morning their whole business model wasn't outlawed overnight because that can't happen in America. Um, Nvidia's Jensen Huang Blackwell demand is insane. That's their new chip. OpenAI valued at $157 billion. CEO tells investors not to back rivals. SEC appeals court ruling on XRP and Ripple lawsuit. OPEC calls report of Saudi minister warning of $50 oil inaccurate. Toyota invests $500 million more in air taxi firm Joby Aviation, whose ticker is Joby, Joby. ADP report, private non-farm payrolls climb more than expected. Somebody's having a ball back there. Humana star ratings plunge. I think they mean in latest. Humana star ratings plunge is latest in recent Medicare setbacks. Levi Strauss, ticker Levi, Levi, sinks on guidance cut potential Dockers exit. And then Maui wildfire caused by Hawaiian Electric's broken utility lines. I guess they've got more info on that. Today's markets mixed bag in Asia, Japan up 2%, Hong Kong down 1.5, China closed, India down 2.1. The FTSE in London at 0.3, Paris down 0.7, Frankfurt down 0.4, the Dow down 0.4, S&P down 0.3, Nasdaq down 0.5, crude oil up 2.2%, gold down 0.2, Bitcoin down 1%. Today's economic calendar, PMI composite final, factory orders, ISM service index. So 9:45 and 10 a.m. we get a few like random pieces of information that could cause some short-term volatility. 10:40, Fed's Kashkari, speaking on featuring frontier research to enhance economic opportunity and inclusive growth. Whenever he speaks, we got to be aware of it. So just kind of understand that, have that sitting somewhere like near the front of your mind, just in case you do see some craziness. Is probably because of him. But other than that, no news, right? We're finished up today, and we have our marching orders here for this week, right? It's going to be playing it safe. It's going to be, not putting a whole lot of risk on the table because there's no reason to. The market has been moving in a very, very difficult way, and not many people have managed to be profitable over the course of the past few weeks. We have, and I don't take that lightly, right? It's very easy to when you have a guide, you have someone walking you through, like, okay, this is what we expect from markets now. This is what we expect now. When you're on your own, you're just kind of like, hey, I hope something happens. I hope it swings my way, right? So it can be a lot easier, and I feel like easier too to get impatient. You don't get impatient really when you're just trading by yourself and you're not aware of kind of the circumstances of your trading. You just get broke, right? You just get broke. You're like, oh, it's not even you getting impatient, but the fact that we have the luxury of impatience because we know, hey, we should not be really doing much right now. That in and of itself is something to have gratitude for because you sit there and you're like, oh, I want the market to start moving again, but at least you know that you're supposed to be sitting there and not really doing a whole lot. A lot of people never get that heads up. And what do? They give that money right back to markets. And especially it happens right after there's a great 2 weeks. Every single time, like clockwork. That's why it's always withdraw profits, withdraw profits, withdraw profits, because they're going to come back for them. And I don't want them to be there when you come back knocking. Hey, I don't know what you're talking about. It's already in my account. Peace, right? We're out of here. And speaking of being out of here, that takes us, to the end of today's session, third session of October. We got 1 quarter left, Q4. Let's do it. Rock and roll. 1% better daily is the goal. All right, guys. Tomorrow morning, our last pre-market prep session of the week. I'll see you there. Peace.